Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Wednesday, April 20th, where I'll briefly discuss what happened in the markets today and then see how things look for Thursday, April 21st. And please be reminded, this is a snapshot video. It's supposed to be very short, and I just cover the highlights of what I cover in the full-length Daily Video Update. So please feel free to check that out if you find this interesting. So what happened on Wednesday? We ended up gapping higher right at the open, but then we saw immediate selling coming right in, and it ended up being a really choppy day from that point forward. We tried to test the intraday high numerous times, and we kept going right back up to that and then bouncing back down, up again, up again, up again. We did see some late day buying coming in closer to the close, but then we saw some selling. So that just added to the overall choppiness that happened. We ended up being down 0.06%. So overall, it was another one of those days, kind of like Monday, where we really ended up where we started. Volume was below average because you have a lot of indecisiveness right now. As far as what we're looking at, the technicals, yeah, they're still negative, but we're seeing some signs of improvement. Inflation and interest rates are still the big concern with a lot of investors, as well as just all of us together. There's a lot of geopolitical concerns that we're dealing with, and then we're also coming into the point where we're seeing some earning shocks and surprises. Just for example, Netflix was down over 35%. And there was a little bit of a run up in that stock beforehand. Once the news came out, poof, it just fell. So what are some comments that we can make? The technicals remain negative, but are showing some signs of improvement. And I go into more in depth in the full-length video. One thing that is interesting, and I'll show a chart, is that the 10 to 5 yield curve has gone inverted again. All the other yield curves are still okay. But for right now, this one has gone back. Netflix, of course, dominated the news because it dropped over 35%. We did have some economic reports that came out, but they weren't real market movers. But they feed over into this general scenario that real estate is performing okay, but we're starting to see a slowdown. And this is mainly due to interest rates going up and inflation concerns. And then every week we have the MBA Mortgage Applications Index, and that also showed a decrease. As far as our trend, we're still in a trendless environment. The ADX is below 20 and going actually a little bit lower. I've switched the bias over to mixed, where we had been more positive after Tuesday's action. Well, with things just not really going anywhere, I'm kind of on the fence with how we're looking on a bias. And usually bias is by the day. If we have an up day, the bias is up. If we have a down day, the bias is down. Well, we didn't go anywhere. As far as momentum, that's looking back 2, 3, 4, 5 number of trading sessions, and that is more negative, but I've also switched it over to mixed because we're seeing some improvement in our charts. Here's what the daily chart looks like, where you could say we had a little bit of a breakout with this bar going out of this range, but then we came right back down and closed near where we closed on the previous day. Then if you look down here on the bottom, volume did increase, but it's still well below average. If we do try to go up higher, just these little shaded areas, I put those in there myself. These are just some other potential resistance areas that we might run into. Some of these lines are potential support areas. Then as far as our ADX, this is what I'm talking about with our trend. It is decreasing. We're below 20. And it's decreasing. But on a positive note, the green line and the red line are just about ready to cross. And if the green line does go above, now our default trend would be positive according to this chart. Another thing that's really a mess right now is our moving averages, and I call it the spaghetti tree. We did get back above some moving averages. We didn't really have any acting as resistance, but some of them are acting as support right now. And when you have so many moving averages on here, it makes it really hard to discern this at times. Then here's our moving average rainbow, where we're trying to come back up into the rainbow with our longer term chart. And then I have a couple of new rainbow charts that I'll bring up from time to time. These go through the 50, 60, 70, 80, 90, and 100 period moving average. So this is more intermediate term. It'll be long term from my definition, but compared to this previous chart, these are really long term. Here's kind of intermediate to long term. And then this is more of our shorter term, 10 through 50 moving averages. And sometimes we can look at this and it gives us a bit of a graphical representation of what's happening. But with all this back and forth and up and down, this looks more like a rainbow roller coaster right now. We're still negative from a long-term trend perspective because we are below the 200-day simple moving average. And then this is the yield curve that went back inverted, just 0.02 with the inversion. But all the other yield curves are still okay. And now we need to watch. Is this one going to go back to being normal? Are other yield curves going to look at inverting? That's what we're going to be keeping an eye on for right now. And then this is another thing that I also pointed out in the longer video is that last March, if you can see right where my cursor is, we saw a little bit of a bounce in the small caps right before we saw that nice move up in the middle of March. Well, we're seeing a little bit of a bounce up now with small caps. Is that going to happen? Now, sometimes this does happen and sometimes it doesn't. This is just something to be aware of, something that we're keeping an eye on. And we just want to see if we see some more strength in small caps, but the S&P is kind of down to a little bit, maybe unchanged, that signal could be generating. So this usually happens first, followed by the S&P. Now, it's not any kind of a full-fledged signal that we can rely everything on. It's just one of the overall pieces in the puzzle that we use to look at things. Another chart, too, is here's staples on the bottom. And when we top out in staples, a lot of times that marks a bottom in the S&P 500. And you can see in the past, other times that's been accurate. The hard part about this is, yeah, we spiked up a little bit, but are we done spiking? That's the difficult thing here. So we don't really know. Just about the time we think that we're getting a spike out of this, it could turn around and go back down, or it could even go even higher. So we kind of use this a little bit in retrospect. We have this in the back burner all the time, and we keep an eye on it, knowing that this is possible. So what's our outlook then for Thursday? The technicals are negative, but they're showing signs of improvement. We're in that intermediate term range that we've pretty much been in for all of 2022. We could even shift it over into a long-term range, according to my definition. The growth and value battle continues to go back and forth. We still have the supply chain issues, not only with what we're currently dealing with, but because of the lockdowns in China. Is that going to make the supply chain even worse in going forward from here? Economic reports coming out. We have initial and continuing jobless claims, the Philadelphia Fed Index, and leading economic index. Not real big in and of themselves unless they give us really a surprise or in case the markets decide to fixate on one of these. And then all of the geopolitical events, Russia, Ukraine, China, supply chain issues, inflation, interest rates, oil, and then earnings. We've got some big companies coming out with earnings. That had a big influence with the whole Netflix thing. Let's see what happens. Sometimes the markets will fixate on these things. Sometimes it'll just hit that particular stock and then not go any further than that, really, possibly into its industry group or sector. So what are our current scenarios? Right now, we are doing scenario number 3. We are sideways. That's why I have this little different color. The ADX is below 20 and continues to decline. We're seeing a real slowdown in price movement. You see on the number of bars that are kind of lined up on the bar chart, and it can get very choppy. You can see the intraday action that we saw on Wednesday as up and down roller coaster style. Now, what are some things that can make scenario number 1 happen? We could go down from here. If interest rates are really going up and there's some inflation fears, that could push stocks lower. Earnings, just like what happened on Wednesday, that could happen again. And then we still have an overall negative technical picture. So that's feeding into the negative side. What could feed into the positive scenario? Things going up from here. We'd still have this positive backdrop after the yield curves reinvert. But that's kind of on hold right now because one of our yield curves is back being inverted again. Not one of the major ones that people really follow, but are the other yield curves going to go back and be inverted again? And then the staple spike, the last chart that I just brought up, if that spikes at some point and really turns and goes down, that could mark a bottom in the S&P. The technicals could possibly be improving, and some of the moving averages and pivot points could also provide support or resistance as well. So what's our conclusion? The S&P is still negative overall. Yeah, on the short term and intermediate term, we're seeing some improvement, but we need to see more follow through. Our oscillators are pretty much a negative intermediate term, and we're below a lot of pretty important moving averages right now. Longer term, we're shifting more to negative because we're below the 200 simple moving average. Here's just a list of some of the other videos that are available to you. So thank you. I hope you have a very good Thursday, and I'll prepare the next snapshot video after Thursday's session.